Gautam Shah is now joining us, founder and chief strategist at Goldilocks Premium Research. Gautam, good morning. Good to have you with us here. Thank you for your time. So have we put the correction behind us, Gautam? What's your sense?
Good morning, Prashant. Well, looks like. I think the manner in which indices have handled adverse news flow, and we've got a lot of it in the last 6 weeks, I think is enough testimony that the markets are internally strong. I think the GDP numbers, which pretty much shocked everybody, and everybody was concerned how the market is going to handle it on Monday, which was yesterday, and the fact that we closed in the green just tells you that the GDP number of last Friday was discounted over the last 6 weeks. And that's probably the reason Indian markets fell 10% while world markets remained quite strong. So I do believe that the market could have formed a bottom at the recent low. We were anyway looking at some serious support around 23,300. That seems to have worked. The price action has looked good. The screen has looked good. A lot of stocks have come back very, very strongly. And I think the final nail would be once the Nifty gets past that 24,500 number, which I think is the final resistance. And once we are above it, I think you can confidently say that the uptrend is back in track. So I do believe that this breakout is coming. December is usually a soft month, a relaxed month. And given the data points, it does look like that breakout is coming. And once confirmed, you could see the Nifty move towards a level of 25,200. But I still believe that this is a stock and a sector-specific market. Don't anticipate something serious happening on the Nifty on the way up or on the way down, because I think there is a battle between domestic money and the economic slowdown, which is being debated and talked about. But the overall trend and trajectory is still up, and I don't think we are going to make new lows anytime soon.
Okay, that will be great. To hear for a lot of people out there who've been reeling under this correction, Gautam. Just confirming the levels. Above what level of a breakout do you see the Nifty heading to 25,200? What's the watch point now?
See, as I said, we've already rallied about 1,000 points from the recent low. And I think the moving averages, and based on a number of studies, 24,500 for us is the line in the sand. Once we are past this number, I think the bulls will take greater control over the setup. And I think that's when the momentum is going to get better. Because in the last 6 to 7 days, the market has still confused a lot of market participants. But I am tempted to believe that the market will find support on every dip like what it's done in the last 2 weeks.
Okay, so 24,500, if that's crossed, then, well, the strip is going higher. Got that. So what's the trade? What's the best long side trade? Not from a 1 week or 10-day perspective, but I'm saying next 2-3 months then.
Well, yesterday we released our big picture report wherein we made a very clear point that the manner in which Bank Nifty, held out in the last 6 weeks while the Nifty corrected 10% is not something we've seen in the last 3 years. So there is a clear message from the market that banking is an outperformer and is likely to do well. And I do believe that the Bank Nifty breakout above 52,500 is coming. If that were to get confirmed, you are likely to see Bank Nifty hit new highs much ahead of the Nifty and much faster of the Nifty. And our working target for the banking index is about 55,000. The fact that you have HDFC Bank at lifetime highs, whereas the Nifty is still 8% away from its lifetime highs, is a major takeaway in itself. So I think banks and IT are the real opportunity. I do see across the board strength in banks. And the IT index, which is already trading at lifetime highs, I think has some excellent charts, great momentum, possibly a 46,000 number on the IT index near term and a 50,000 number over the medium term.
Okay, hi Gautam. Good to hear you today. You're sounding quite pepped up, and you believe that the market has a higher likelihood of moving up than moving down. So that's good news. But you mentioned a couple of names. HDFC Bank, it's come out of its slumber and now, in fact, it's gunning for higher levels, which is great news for the banking index as well as for the Nifty, because that was, not able to perform in the recent past. What levels are that one going to test? And what about Reliance Industries? At the start of the series, we had a couple of experts who joined in, and they were talking about the short positions at the highest levels we have seen ever. Where is that one headed, Reliance Industries? Because it's been an underperformer for past 6 months.
I think the underperformance will continue. And in fact, if somebody took a pair trade of long HDFC Bank and short Reliance, I think that trade has worked wonderfully in the last 6 months. In fact, that's been our stance. And the fact that the open interest on the short side is so high in Reliance Industries, and the reason why that could be, see some short covering just on account of that, I think that's not the right way to think about it. Reliance remains an underperformer, and I think it's going to remain this way for many more weeks to come. I don't see the outperformance returning anytime soon. Whereas HDFC Bank has handled a very difficult period really well. And I think this market has moved from growth to value. And many of these top stocks which have done well in the last 6 weeks have typically become, have been value stocks. So I do believe that over the next few months, we should see an HDFC Bank easily move towards a level of 2000 and maybe do plus plus. And apart from HDFC, we also like SBI, where we feel that a 20-25% up move is coming, along with ICICI Bank. So the key message is in each of the major sectors, stick to the big boys. And apart from the banks, I think if there are two dark horse sectors which I think can really outperform over the next 3 to 6 months, that would be real estate and metals. Real estate coming out of a 6-month consolidation, and metals has been at the lower end of the range. And I do believe over the next 1 year, it could do something special.
And this morning I think we got this call from UBS as well on real estate, and of course metals is something else you're pointing out to right now. NTPC Green, by the way, I'm just highlighting that it was not there in the mix. The stock will come up on your screen. It suddenly shot up to being the second largest volume-led gainer, right behind Swiggy. Swiggy is given up 4% from the day's high. NTPC Green is up 5%. It started kind of flattish and then picked up quite a bit through the course of the initial few minutes or so. Gautam, in metals, what exactly do you want to name names?
If you look at the last 4 to 5 months on the metals index itself, 86 has been a sort of a floor and 10,400 has been a ceiling. We have been oscillating within the same. We've handled a lot of news flow from China, and on account of that, we've seen a lot of volatility. But the charts are clearly very well placed, and I think the new wave on the upside is what metals could see over the next 12 to 18 months. You'll have to play slightly long term and not short term. And I think some of the top stocks like JSW Steel, JSPL, Hindalco, Tata Steel, in fact, the entire basket, even a Nalco, which has been such a big outperformer, we like the entire basket, and not to forget Vedanta, which I think is also at a important medium-term support. So the idea is, if you want to play a basket in metals over the next 12 to 18 months, I think you are going to grossly beat the Nifty, and that's probably been our stance.
And what in real estate? Just 2 or 3 top ideas, best bets?
See, real estate, when the breakout happened a couple of years back, we always believed that this is a structural story, because what I heard on the ground and what I saw on the screen, I think there was a clear match, which was good to see. 6 months back, everything got a little out of hand. It needed a nice long consolidation, which happened. DLF remains our top pick, and I think at levels of 830-40, there is not much to lose, and there is potentially 30 to 40% to gain. Again, in all the sectors, I'm sticking to the big boys. So I'm still very comfortable with DLF, Oberoi Realty, and Godrej Properties, and I expect these 3 stocks to deliver serious returns. And I also expect the real estate index to make new highs over the next few months.
Okay. Gautam, in all this, I was just going back to a conversation we were having with a global guest earlier on in the show. The thing is that, and it's great to hear that you're finally, sounding optimistic on the Indian market. But I guess internationally, the big trade still seems to be buy America, everything America, right? The dollar higher, equities higher, etc. So how do you see the next, say, month or two till we get into full-fledged back into January play out? Will it still be primarily US market driven? Yields have now started cooling off. The dollar is still pretty strong. I mean, can India move higher now in step with the US? Because till now it's been an absolute underperformance last 2-3 months.
Yeah, I think that's a great point. In fact, in one of our reports yesterday, we shared the view that if you look at the last 10 years of data, the Dow and the Nifty have pretty much moved hand in hand. And it's just been top in the Dow leads to a top in the Nifty, bottom in the Dow leads to a bottom in the Nifty. It's happened for the last 10 years. We put out a lovely correlation chart there. For the first time in many, many years, in the last 2 months, you saw the Dow making new highs and the Nifty going through a 10% correction, which I think baffled everybody. And I do believe that the internal GDP numbers was really responsible for this underperformance. People talk about FI selling and valuations and all of that, but I think that was getting priced in. Now it seems that this disconnect, which was there for a short period, is going to correct. So Indian markets will move higher and US markets will remain steady, because when I look at the top stocks in the US and the fact that the Russell 2000 in the US markets have gone to hit new lifetime highs, which I think is an event in itself, because everybody was complaining that the top stocks were doing well and the Russell 2000 was not doing well. So I think India and US going forward will move hand in hand, and the US market setup remains positive, and I'm looking at another 10-12% upside for all the headline indices there.
Okay, another 10% upside, right? Even in the US market for the key indices. All right, so good times. Perhaps Santa Claus indeed is coming to town. Thank you so much for joining in, Gautam. Pleasure having you on the show as always, and look forward to more conversations soon. Let's